Good evening, everyone, and welcome to today's session of After Hours with William O'Neill India, dated November 25, 2022. Last After Hours session for the week. And before we go ahead, I would like to give a small disclaimer that any security, any stock that we might discuss in today's session should not be considered as a buy or sell recommendation, and we are just doing it for education purpose. So without taking your much time, I'll start with Nifty 50's chart analysis for the day. I mean, if we talk about Thursday's action, Nifty didn't reclaim its all-time high, but it was above the 52-week high and created a new 52-week high around the 18,500 level. Yesterday, your US markets was closed, so it was a very muted or very low volume action which has been happening for the last few days. And similarly, if you look at it on low volume, there was like it was market was kind of volatile. Even if you look, wait a minute, chart. So it kind of started on a positive note, but there was this sharp fall of like 60 to 70 points in the first 5 to 10 minutes itself. And then again, Nifty tried some kind of recovery. And then you can see these big seesaws that was happening throughout the day. So that shows that Nifty was highly volatile through the day. And but as you can see, like major markets participants in terms of fear, institutional investors have kind of missing in the moment because of amount of the low volumes that is happening at the moment. So what I was probably talking about the low volume action, if you look at it in terms of the action in the last few days, last 7 to 8 days have been very low in terms of volumes. If we look at it, even on the positive days or the negative days, it's been very low. So Nifty is currently sustaining above your 18,350 levels, which is the previous 52-week heights around the 18,500 levels at the moment. Well above your 50 DMA, well above your 200 DMA, well above your 21 DMA as well. And even your D-Day count is very low at one. Markets in confirmed uptrend. So at the moment, like good time to buy stocks in terms from the William O'Neill criteria, but probably what's lacking at the moment is action from the broader market. Like if you see markets are near the all-time high, but if you look from the mid cap and the small cap perspective or the broader market perspective as a whole, your the other indices are not probably gaining that much in line with probably what's the index is gaining at the moment. So we can probably hope that these broader market indices gain as the weeks continue, probably, or probably there can be some kind of weakness also in the market. But all of that can only come to a conclusion when probably volumes or your institutional participants come back to the market. Like on low volumes, it would be a very, it would be a not a good time or not a good judgment to make, because the big players are the ones who probably move the market around. Talking about top gainers, like HDFC Life was a top gainer, gained around 2.7%. Tata Motors, Hero MotoCo, Coal India and Reliance were the other gainers around 2.6%, 1.4, 1.4 and 1.3% respectively. On the loser front, there was no major loser as such, like losing more than 1%. ICICI Bank lost by around 0.9%. Similarly, Nestle by around 0.9. Kotak Bank by 0.8, Titan by 0.7, and Britannia by 0.6%. Talking about your sector view, I mean, apart from Nifty Media, like where your Z makes a very huge component of the index of more than 60%, the other major gainer for today was your Nifty Realty, which gained around 1.2% for the day. Even Nifty Auto gained in a good chunk by around 0.9%. You can see some kind of profit booking in the financial services and the banks, like they were in good momentum in the last few sessions. Similarly with your PSU Bank as well. Talking about key news, India to acquire 50% stake in H2 Fuels and Energy, a startup company engaged in developing processes to convert waste to liquid and solid fuels of 6.15 crores. Similarly, Wabag to issue non-convertible debentures worth rupees 200 crores. Castrol India shareholders and sales subscription agreement with Key Mobility Solutions for acquisition of 7.1% stake for 487.5 crores. Adani Enterprises to raise rupees 20,000 crores by way of public offering by a fresh issue of equity shares. So we've come to the chart of the day, and the chart of the day is this Dalmia Bharat cement company. And before we go ahead with like discussing about this stock, would like to give a small disclaimer that currently the stock is not a buy or sell recommendation, and we'll be discussing this just for educational purpose. First would like to discuss about the business prospects and the fundamental aspects of the company. I mean, Dalmia Bharat is among the top 5 cement producers in the country with capacity of around 37 million metric tons per annum, having strong market positioning in the key markets of South, East, and Northeast India. Overall market share for the company stands at around 5%, and the company is on a capex cycle and is progressing well. And by the end of FY23, total capacity is expected to be increased to from 37 to 40, and by 48.5 uh, by the end of FY24. The company has a target to get the capacity to 75 MTPA by FY27 and to gain more market share as they'll be going forward. And similarly, the company has been reporting better than expected performances on the operation front in the Q2 FY23 on the back of higher volumes and better realization. Volume revenue grew by around 13% and 15%. EBITDA margin for the quarter stood at around 13%, and company reported volumes of around 5.8 MTPA against 5.10 MTPA reported last year. And in the H2 FY23 also, the company is expected to report decent performance. Why probably the positivity for the company comes in mainly on the back of strong pipeline of infra projects, government spending, and affordable housing and real estate demand. Now coming to the William O'Neill criteria and the technical front, this similarly like what we were talking in terms of the business profile for the company, the same can be seen in the EPS strength as well. Buyer demand for the company is really strong at A minus. And if you look at the institutional holding for the stock, that is improving really well in terms of quarter on quarter, nearly 5.5% of additional FI institutional inflows for the stock has come in. The RS rating for the stock is poor, but if you look at it, the like on the right hand side of the cup, there was this good accumulation, and RS line was trending higher, then started to form the handle formation. Probably again, if the stock, the RS line trends higher in terms of good price volume action, and you can get a breakout, then the breakout is just 2% pivot. That would be really good. I mean, considering other cement stocks as well, the stock also came under good pressure. And but if you look at it, I mean the reclaim from the technical perspective, the reclaim on 200 DMA was on above average volumes, and similarly in this last reclaim as well, if you look at it, this last reclaim of your 50 DMA also was on above average volume. So both of these are really good sign. The other parameters are also satisfying. Probably if RS line ticks up from here and you can see a good breakout on above average volume, can be a good stock to watch out for, considering the strong infra push in the company in terms of the real estate demand in the country as well, for and the push for affordable housing and the other demand drivers that just discussed. So overall, probably we can wait for the stock to break out and probably have a good time over the weekend, and Thank you, and that's it from our side. And probably you can connect with us again on 8:45 a.m. sharp on a Monday morning and 4:30 p.m. for your after hours session in the evening from Monday to Friday.